Internal Revenue Service IRS tax news. IRS extends additional tax deadlines to May 17th. COVID tax tip 2021-45, April 7, 2021. The following extension of the filing and payment deadline for individuals to May 17, 2021, the IRS announced other tax deadline extensions to the same date. So note we have this extension that took place. Typically, as most people are aware, the tax is due April 15th normally, but now been extended May 17th. And then there's other issues, of course, once you have an extension like that. The question is, are other things going to be extended, such as payments and whatnot, and other types of related items, such as IRA contributions, and so on and so forth. So let's think about some of those other items that could be included that may have that extended date as well. So there's a link to some of those other items here, so you can check that out. There's a link to this in the description. So we have contributions to IRAs and health savings accounts. People now automatically have until May 17th, 2021 to make 2020 contributions to their individual retirement arrangement or accounts, the IRAs, the health savings accounts, the Archer medical saving accounts, the Coverdell education saving accounts. So these are types of things that typically they're like the last type of thing that you can kind of do for tax preparation purposes when you're actually filing the tax return. So for example, in 2020, when you actually are, earning the money, then that's when you have to do some of your tax planning typically. But some of these items are usually going to be extended, meaning you could still put money into, say, IRA up to the point in time you typically file the tax return, which is usually April 15th. But now, because the extension happened, May 17th is the tax deadline. The question then is, do we have an extension on these types of things that are kind of like the last minute things that we could put money into? And they're saying, yes, we do, which is good. So normally when you file the taxes, just remember with these types of arrangements, especially with the IRA, which is probably the most common, if you have a 401k plan with your employer, then typically you want to try to max out your 401k plan because you could usually put more money in there and you might have other benefits like matching type of situations with them. And then if you can put more money into an IRA and you have the money to do so, then your tax software is often helpful to tell you how much more money you can put in it. It can actually be quite complex to think about how much money you can put into an IRA and a retirement plan. It's nice to have some cushion of being able to file the tax return to be able to maximize the amount that you can put in there. In other words, if you don't have access, for example, to a retirement plan and your spouse doesn't, or you're not married, then the limitations are fairly straightforward. But if you do have access to a retirement plan, or your spouse has access to a retirement plan, then there's kind of questions as to whether or not you can still put money into an IRA even though the year in question, 2020 in this case, has closed. Tax software, very helpful to be able to give you advice in terms of whether or not you could put more money into an IRA. And that's why it's really nice that in the following year, in this case in 2021, you can kind of use the tax software to cap off any kind of contributions that you could put that would be applicable to the year in question, this being 2020. So the deadline for reporting and paying the 10% additional tax on accounts included in gross income from 2020 distributions from IRAs or workplace-based retirement plans is now May 17, 2021. Lastly, the due date for Form 5498 series returns related to these accounts is now June 30th, 2021. 2017 unclaimed refunds. Now we're talking 2017 unclaimed refunds. They're basically saying, hey, if you haven't claimed them, you should claim them soon because otherwise the IRS is going to claim them and you have a certain time period to get those. So the law provides a 3-year window to claim a refund. Normally, April 15, 2021 is the deadline to claim a refund from tax year 2017, but the IRS has extended it to May 17, 2021. So that means that if you haven't filed from 2017, and you might have said in 2017, and you might still be saying, hey, I don't need to file. The only reason I'm filing now is because they're giving me these free economic impact payment money, and they're telling me I need to file to do it. Possibly, you might be in a situation like that. But even if you're not required to file, that just means the IRS isn't going to come after you because you're not paying your taxes. You probably don't owe any taxes if you're not required to file. Does not mean necessarily that you're not owed a refund in some way. So if you had any work that was done, any withholdings, and your income is low enough that you do not owe taxes, that amount could be refunded to you. Not only that, because you might say, well, that's pretty low. I mean, it's not worth my time to file for that. But you might be eligible to get these refundable credits, like an earned income tax credit or possibly a child tax credit. So it could very well be likely or worthwhile to file the tax return, even if not required to do so. And there is a limitation in how far back you can go to do that. So you want to take a look at it. If you haven't filed in a while, you might try to file, look what it looks like in 2020, because you have free software in 2020 to do it if your income is below a certain threshold. And if you find that you're eligible for the earned income tax credit or a child tax credit, refundable credits that you may have been eligible for in prior years too, then you might want to take a look at prior years. I'm not sure you'll have access to the free software in the same way as with 2020, but if you get an idea of where you stand, then you can think about whether it would be worthwhile or not to then file the tax return for prior years. If you get the wheels rolling, filing the tax return so you get it in within the deadline and you have problems with it, the IRS questions it or something like that, then you should be able to keep going. You got your foot in the door. If you just let the time pass, then they close the door and your foot, won't stop the door from completely closing and not having access to any kind of potential refunds from that year. Also note that if you do not have the information, you might say, well, yeah, I can file 2017, but I don't have like the W-2s and that kind of stuff. Remember that the IRS forces whoever gives you that information, the W-2s and whatnot, they want it to go to you, but really they want it. They sent it to the IRS. The IRS has that information, so they can't give you that information. You can possibly get transcripts from the IRS. You can go log into your account, order a transcript, and then get the information from the IRS if you don't want to go talk to your prior employer or they're gone or something like that. You could go to the IRS and get that information and then possibly build the tax return from there as well. So just keep that in mind. So to get the unclaimed refund, a taxpayer must properly address and mail the tax return postmarked by May 17, 2021. If a taxpayer doesn't file a return within 3 years, the money becomes property of the U.S. Treasury. And then what happens when it's property of the U.S. Treasury? It just disappears and fades away into the ether and no one benefits from it at all. So foreign trusts and estates. Foreign trusts and estates within the federal income tax filing or payment obligations who file Form 1040-NR now have until May 17, 2021. 2021 annual filing season program application deadline. Tax return preparers who'd like to participate in the annual filing season program, the AFSP, for calendar year 2021 now have until May 17, 2021 to file their application with the IRS. No professionals can learn more on the AFSP page on IRS.gov. So tax professionals can learn more on this page. There's a link to that here. No extension for estimated tax payments. So the April 15, 2021 is still the deadline to make first quarter estimated tax payments. Now this is confusing because, and this is only really applicable if you have like some kind of tax return where you have to make estimated payments. Normally the IRS likes to set it up where they force your employer to take your money from you before you ever even see it, right? It just comes out of your paycheck stub, and that happens as you earn the money, and therefore you don't really have to do anything. And you can just pretend it didn't happen. Just, that they're just taking your money and you're just like, but you never see it. But if you have to basically file and pay them, and that would be like if you have a Schedule C type of business or something like that, then you got to pay them quarterly and they want their money basically as the year goes, as the year progresses. So you typically need to make quarterly payments at that point. The last quarterly payment for 2020, I believe got extended. So if you're talking about the 2020 payment, then I believe that's going to be an extended payment for the last quarter of 2020. But what about the first quarter for 2021, which is typically due on April 15, 2021? Is that extended? They're saying no. So the first quarter of 2021, you still have to pay on the April 15th. That could be a little bit difficult because if they extend the filing deadline, you could have a situation where you haven't filed the tax return for 2020, and therefore you don't really have an estimate yet for what the taxes will be for 2021 if you have a Schedule C type of business. So you have to kind of guess what that is so that you make the payment in the first quarter so you don't subject yourself to penalties and interest. And then you could be in a situation where you still haven't paid the last quarter, the fourth quarter of 2020, because that may have been, extended along with the filing deadline, even though they didn't extend the 2021 first quarter payment. So that can be a little bit confusing. If you're new to filing a Schedule C type of business, and many people are this year, then make sure you understand these estimated tax payments and make sure that you're aware of how the Social Security tax is going to have an impact on your taxes as well. That's often a surprise to people. And if you get behind on these payments, especially if you don't file or something like that, it could get overwhelming quick. So, try to be on top of that. You got to file your taxes, that if you owe any taxes at the end of the year, and you got to think about the first quarter payments, and then try to make your payments as the time passes, even though you don't know how much you owe until you file the tax return at the end of the year. You have to estimate it. So withholding is automatic for most employees, but some taxpayers' income isn't subject to income tax withholding. These taxpayers must generally make quarterly estimated tax payments. Income that may require estimated tax payments includes self-employment, so Schedule C, that's probably the biggest one. If you have a lot of interest dividends, then, that's great. You got a lot of passive income. That would be good. Then you might still have to be making the estimated tax payment. Alimony, if you're subject to, if you have a lot of alimony that you're required to report as income, then you might have to make estimated payments because there's no withholdings on that, and rentals possibly. So taxpayers should, and that would be like another type of business, Schedule E, type of business revenue related to that. So taxpayers should review IRS Notice 2021-21 for more information about these extensions. There's a link to that here. There'll be a link to this in the description.